Unsecured credit. Today we're going to show you the last 10 clients that went through our unsecured business funding program, which is for unsecured credit. We're going to tell you what the heck it is, who needs it, and why. All right, let's do this. Hello and welcome back to another episode of Finance Agents Live. This is episode number 83, where we discuss unsecured credit. Trey knows a little bit about this. This is Tim MC. I'm joined today by Trey Sublet.
That's right.
All right. Thank you for joining us on the show, Trey.
And this is Tim McCormack.
Tim MC.
Tim MC.
For all my peeps. Or whatever. All right. So real quick, let's dive into this. Today we're going to be talking about unsecured credit. One of those programs that's got like 100 different names. We call it UBF, Unsecured Business Finance, Unsecured Business Funding, Unsecured Business Lines of Credit. Some people call it UBlock. Right. A lot of different names. What the heck is it and who needs it? Today we're going to touch on that. But before you do that, quick, go subscribe. Hit the button, become my friend, put little messages on there. Let's talk. Let's get to know each other. All right, so what is it? What the heck is unsecured business funding, unsecured credit? Trey, go.
It can be a lot of different things. First and foremost, everyone can use it. There's not anybody who can't use it, but business credit cards.
Unless you have a bankruptcy.
Right. Personal credit cards, it could be personal term loans or even small business term loans. So it's an assortment of different options for a new or existing business.
Right. Unsecured credit is a blanket term that we use to describe all these different types of credit cards and term loans. Our program, we don't actually get into the small business term loans, although that technically is unsecured credit because it's a whole different application process. So we try to focus just on the things that are easy and quick to get. Boom. So what the heck does unsecured mean? That means that I don't have to pay it back. Right, Trey?
Not necessarily, no. Unsecured
don't have
means
it's unsecured. I can just walk away.
It does, you do have to pay it back. So it does require some sort of collateral. So, but it's not direct collateral. It's
no direct collateral.
It's not not putting up your house or any physical assets for an unsecured product.
Okay. So when we say no direct, collateral is where they attach a specific item to something. This is not collateralized by an item. It's simply backed up by your name. So no direct collateral. But of course, obviously, you got to pay it back. And the business credit, what's awesome about that, Trey?
The business credit comes down to, a lot of people need to understand a business has a credit profile like we do as individuals. So business credit is how lenders will judge you and your company down the road. So there's our Experience Smart Business, there's Equifax Commercial. Those are the main reporting bureaus. So a business credit profile is important to securing more traditional funding down the road.
It is. But the cool thing about these programs is it's mostly based on your personal credit, so you don't need to spend years building your business credit profile. That's better for other programs. Fortunately, you don't have to wait for that. And most of these funding products won't even show up on your personal credit because they're considered business products. So you can go get $100,000 for your business in credit cards, and then go apply for a mortgage next month and not have any impact of having all this new debt. That's one of the reasons people love it.
Can I give you one of my pet peeves?
I love pet peeves.
I cannot stand when people say, Trey, I'm looking for non-PG funding.
Non-PG
funding. So
because they want rated R funding.
That's right. That's right. So
what is no PG
just
funding?
PG-13.
PG-13, okay.
So going to this point we're talking about here is it does require a personal guarantee, unsecured funding.
PG, personal guarantee.
Personal guarantee.
Got it.
And so, but if you're a lender, why would you want to lend to someone if there's no recourse? So at the end of the day, this does require a personal guarantee, but yet no collateral to attach it to.
Okay, cool. No collateral, but a personal guarantee. And because of that, they don't show up on your credit unless you
could
ask
go
them to?
Well, so a lender, if you were to default on the funding, the lender does have the choice to show up on your personal credit. But that goes back to one of the main benefits is division between the business credit profile and your personal credit profile.
Right. Okay, so just make your payments and it'll never show up on your credit. That's a good feature. So who needs this stuff? Who needs unsecured credit?
Who doesn't need it? So let's start off with startups. Yes. Startups are not very attractive in the lender's eye. So if you cannot file at least 2 years of business tax returns, you're deemed as a startup.
Okay. All right. So startups love unsecured credit. What are some other examples of businesses, business types or general whatever, that really likes unsecured credit?
Well, a business that needs capital fast. Or maybe they don't want to provide all the documentation for more traditional funding, so don't need to provide any financials or income statements. So a lot of people are within the real estate arena. That's a restricted type of industry for most banks. And then also, property flippers, people looking to buy into a route, small franchise. Those are all people looking possibly a great fit for unsecured finance.
Great. When you go into the bank and say, I want business funding, and they say, great, give me 3 years business tax returns, your last medical checkup, all your most embarrassing moments, they really dig into it. They don't know exactly that, but really it's quite a process. So other people that love unsecured finance that doesn't ask for all that stuff would be, say, cash businesses. Imagine a liquor store where they might not be reporting all their income. What they do, that's what they do. But it makes it real hard when you go get financing. So this financing doesn't dig into that, so it's okay. Also, restricted industries. There's industries where you walk into a bank and say, I want funding for this. The bank says, you can see the door over there. Right. Fortunately, it can work for unsecured finance depending on how you structure it. And that's some of the value that we provide to our client, is helping them make sure that they structure it in the right way. One of those being one of the ones Trey mentioned, which is flippers. You say, hey, I'm going to go flip businesses or flip houses for a living. The bank's going to say, that's cool, that's an investment. Get the heck out of here, because we don't want to hear from you. Sorry, Darren's doing stuff. Let me help him out. But for flipping, you can use credit cards to help you with the renovations. It might be a little difficult to use it on the down payment on the house, but for the renovation expenses, Home Depot, buying stuff, it works excellent.
Also, one other example would be a business that's not really healthy. Maybe they're having a tough time with revenue, or they've taken a loss the last couple of years. So an existing business that doesn't look so quite nice with the financials.
Right. Okay, so those are all businesses that love this. With that said, we're going to give you 10 specific examples, the 10 most recent clients that we've had come through here. I just went through and I picked, I'll be honest, we have so many of these that I just picked the ones that I thought were a little more interesting within the last month or so. So they're not exactly the last 10, but you get it. Boom. First of all, let's start with the Cheese Melt Company. This one made me hungry.
Yeah, so this was a
Cheese
company
Melt.
that had a certain specialty as far as vegan products, and they were launching a new product.
Vegan cheese?
Yeah.
Oh,
And
that's
so
weird.
this was a new product that they wanted to
have to try
really
it first.
be able to launch before summer. So what was really important to them is speed and maneuverability. So they were able to get the capital pretty quickly within 2 weeks, 14 days. And 65,500 to see here is the results. But the goal was to get fast and be liquid and be able to develop out this new product for their company.
That's right. Nothing says summer like vegan cheese. All right, so that's the first
And
client.
coffee.
We're going to be going through these pretty quick. If you got any questions about any one of them, please put it in there. Or if you have an example, you want to know, hey, would this work for unsecured finance? Let me know. The second one, now that I found out it was vegan cheese, the second one is probably a little bit more my speed. Got the Whiskey House here. Whiskey House, we were able to get them $100,000. Time to fund in 6 days. And here's one of those things where they needed money to get a liquor license. Now, if you go to the bank and say, hey, I need money to get a liquor license, the bank's going to say, go away, that's speculative. That's a speculative investment, because you're going to apply for the liquor license and they could tell you no. Banks don't like that kind of risk. They like risk where you're going to open the place up and they know you're going to have, refrigerators and counters and clients. Actually, they already want to see them there generating revenue. So if you want to get something like a liquor license, you got to find other ways to get the funding. Either save it up or you could do unsecured finance. And what else is really interesting about this one, Trey?
Well, we actually eliminated the cost structure, the consulting cost structure for this client, and a lifetime supply of whiskey.
Oh my goodness.
So
really?
That was, there we go.
And we're still drunk.
Right. So one of the things about this file was the main person didn't have the best credit in the world, but they had a business partner who had good credit, and we utilized that individual. So this is very prevalent within a lot of different unsecured programs. So, but kind of not a restricted industry, liquor, but they utilize someone else who has good credit to help them build up their business profile itself.
One of the great things about the unsecured funding program is if you come in and start a business, you may plan to have 2 partners on the business in the future, but if one of the partners has good credit and one doesn't, we can just start the business with the one partner, go ahead and apply for funding, and then you can choose to do whatever you want. You want to add the other partner on later. That way it doesn't interfere with getting the funding done. We do have an example a little bit later of somebody who refused to remove the partner with the bankruptcy, and we were still able to make it work, but it makes it a lot more challenging. This one, they did it the normal way where they started with a good credit partner and just moved on. Okay, chocolate company. I'm like, this seems to be a good thing for food, Trey.
Sure.
Food and drink.
So we've gone from cheese melt to whiskey to chocolate. So the scenario here was someone, this is very often the time where someone has a hobby and they're doing something at home. And so this is where someone was doing a chocolate gourmet company out of their kitchen.
That sounds good.
So they wanted to expand or really launch their business to get into a location, and instead of making a mess of the kitchen, have actually a large, more industrial kitchen for higher production. So
more chocolate.
yeah, there we go. So new location. So they, in this case, the wife has had okay credit, but her spouse had strong credit and income.
All right.
So we were able to utilize him with the file into a combination of unsecured business funding and personal term loans.
Okay, so we did two different things that we combined together. Do you do that a lot?
Often. That's why as a consultant you always need to know the income of the person you're talking to. So oftentimes the goal in this case was about $80,000, $75,000 range, I would say, to get into the location. So to accomplish that, we had to do both programs.
So what's easier to get, the credit cards or the personal term loan?
It's easier. Well, personal term loans more based off the income of the individual. You still need to have decent credit. I would say that's faster. So a personal term loans will be a lot quicker within 3 to 4 days compared to unsecured business finance. So it really, again, want to sculpt the consultation to match their needs. But what's easier? I don't really think either one's easier.
Well, I guess it depends on your situation. If you have excellent credit and no income, you can get the credit cards.
Right.
If you have good credit, not necessarily excellent, and good income, you can get the personal term loans. In fact, sometimes you qualify for term loans where you can't even get the credit. So it really is a toss-up. When we look at a client, we review and we can tell you exactly what you qualify for right away. Then you choose to figure out if that's something that's going to serve your needs. A lot of what we do is figuring out how figure out how less money can help somebody accomplish their goals, because you don't always get exactly what you're looking for, but we can get you what you need, right?
There we go.
Isn't that a song?
All right. You always get what you
All right, next we got a cleaning company here. Hot Men Cleaners, right, Trey?
Sure.
Is that a picture
Whatever
of
say,
you when
Tom.
you were younger?
So this was an existing business, a cleaning company, and they would just taken on a new big contract. So they needed
Hey, that's good
funds
news.
for that new client, as far as more staff, supplies, and in essence they were going to be doubling their monthly revenue. So this is a big time client for
They're
the
cleaning
individual.
up.
That's right. So we targeted this program because the financials weren't the strongest, and he kind of lacked a little collateral. But he had good credit and was able to get the results in a pretty timely manner.
Awesome, cool. Yeah, if you go to the bank and say, hey, I'm about to double my revenue, they're going to say, awesome. Come back after it's doubled, but they're not necessarily going to give you the money to help you accomplish that when you have real expenses to bring on more staff or buy a bunch of supplies. So this is a great way to do that. Okay, here's another one, Teriyaki Restaurant. All right, this is an interesting one. We got them $89,500, took 16 days, which is, I don't know, a pretty reasonable time frame. When they came in, they probably really needed an SBA loan. An SBA loan is good for buying something where you're starting a new restaurant and you want to pay it off over a long period of time, you want to have the lowest payments possible. SBA loan is great for that. But the downside of the SBA loan is you got to put money in. It's called a capital injection. And for this one, because the person didn't have any restaurant experience, they're going to need to put 30% down, and they just did not want to do that. So fortunately, we did a pivot and put them into the credit card program, and boom, they ended up getting $89,500. I believe that was enough for them to start their restaurant. Maybe they want to go back and refi that later with the SBA loan. One of the things with SBA loans is that they can take a bit of time. You don't really know exactly when they're going to close. It could be fast, could be slow. This one we were able to knock out in 16 days to get them started, and then they can come back later and do other funding later. All right, now I'll let you talk about the next one, Trey, since it's something they probably do in your home state here.
Well, it's actually National Hog Day, so very good.
Shut up, really?
No, not really.
Okay.
So on this file, they basically needed funding fast to buy more pigs, and so
it's hog control. They literally go out and kill feral hogs. This is a weird one.
They round up the hogs with hogs.
What?
They use the hogs to round up the hogs.
They use the hogs to round up hogs?
Right. So,
I don't know where we're going with this. But for real, they literally go out and kill feral hogs. It's a weird business.
Right.
Really weird business. And they got money.
So one of the key things is most lenders for like traditional products won't be able to know how to judge that type of business model.
Yeah.
It's so unique.
It's pretty weird.
Yep.
Pretty weird. I didn't know it was a thing until I saw this, right?
Right.
How long have we been doing this, Trey?
Long time.
This is up there on front of the weird list for the credit card program. Every once in a while you come across something you just never even heard of before. So I guess there's hogs are difficult to manage. Lots of hogs. Okay, next one. I put this one on here because I want to know what the heck are millennial services? I guess I'm not a millennial. What you want to guess at what you think services for millennials would be, Trey?
Hats you wear on backwards, I guess.
Have them apply for college,
There you
maybe?
go. There you go.
Right.
So
Making their Tinder profiles for them?
right. This file needed funding a little bit faster than what more traditional funding would present as far as the process. So they could have gotten more with this client, but they hit their goal, right, Tim?
Yeah, they hit their goal. They came in approved for credit cards and personal term loans, did the credit cards first, and they got enough that they said, you know what, let's pass on the term loans for now because I got plenty of money for my business. I always like when we hear, cut it, I've had enough.
Now, we know that most people underestimate what they need, and
Right.
so don't really like to hear that too much. So get the capital now because most of this is
Harder to get it
revolving
later.
credit.
Yeah.
It can be used over and over and over again. So you don't know what's coming around the corner in a month or 2 months down the road.
Those millennials might be just super excited about your services and want to get more.
There you go.
Any other ideas on millennial services?
It's
All right, next, electronics repairs. This one you touched?
this is not something I worked with.
Okay. I know about this deal. They came in, this is another one of those clients that came in, approved for multiple programs, and boom, they got one loan for the whole amount that they wanted, and they said, enough, right? So I'd like to be able to serve somebody's needs, 30 grand, boom, and they're out there repairing electronics. So quick,
Help the
rapid
millennials.
success story. Not for millennials. Okay, fix and flippers. You know anything about this one?
Absolutely. So for years, we've always helped a ton of people. We've talked to people every day looking to get in the real estate arena. So this is an example of someone who is a real estate investor. They're going out and acquiring properties and flipping them, or acquiring, rehabbing, and then selling. So
This is the one with the two partners.
yeah, so they had issues. The total funding took a little bit longer. Usually, I always say the funding process is about 3 weeks on average, but it was a little bit different with everything has to be synced up. So one partner was not listed on the business, correct, Tim?
No, so what happened was they had two partners, one with a bankruptcy, and they refused to remove the person with the bankruptcy. That means the banks are going to do additional review. Plus, the good credit partner had to do some pay downs. Actually, she'd let her credit utilization get too high, and we had to pay it down in order to get her into the program. So all in all, it took 2.5 months because that's how long it took for them to make the pay downs and then have the information reflect, and so that we could go out and do the applications. Again, that's one of the things we'll do. We'll look and say, you qualify for a lot of money if you pay down that $15,000 credit card that you're maxed out on, and if you just gone out and applied, you might have only gotten 20. So it's a big difference using the expertise of somebody that does it all the time.
Last thing we want to do is take on a client and get 0 results. So we're working for free doing that pre-qualification process.
Right. Okay, and then last but not least, this one looks like a super cool business. By the way, before we did this, I didn't go talk to businesses and get their permission to talk about them online, so I can't tell you that. That's why we haven't said the names of these businesses. But this one is probably the most interesting one, even more interesting than the feral hog cleaner. It's a really cool app where you go and you watch movies on there and you get points for what movies you watch. You can compete with your friends and you get rewards for the more movies you watch, right? It's like they're paying you to watch movies. Literally, they actually are paying you to watch movies. So that was super cool. We were able to fund this thing in 13 days, which is pretty darn quick, especially considering it was over the Christmas break. All right, so you got to think you got a lot of days that the banks, everybody are closed. This came in right before Christmas and was done right after New Year's Eve. So 13 days, in and out, new business, boom, and now they're out there paying people to watch movies.
No financials, no collateral, right?
Right.
They can take this operating capital and double it up down the road themselves, and they're building up their corporate credit profile of this new startup.
If you went into the bank and say, hey, I want to do this cool app where I pay people to watch movies, they would say, that's so cool. Come back to us when it's been done and you have 3 years business tax returns. And you say, well, how the heck am I going to get there? Boom. This is how startup funding, this is the best way to do it. We've literally funded thousands and thousands of companies with this type. So if you're a startup and you have good credit, this is the way to go. All right, so that's it. Unless we have any questions, feel free to throw them in now. Thank you for coming on and learning about the last 10 UBF or unsecured credit clients that we helped. Next year, we're going to do it again, or next week, we're going to do this again. We're going to talk about our last 10 RBA clients. Those are revenue advances. What is that? If you don't know, come back next week, find out. It's going to be me, Tim McCormick, Tim MC, and Rhoda Flum. Speaking of Rhoda, I just wanted to say this before we finish. she does these cool things where she brings in stuff to the office. Here, she brought, I don't know if you're going to be able to see this, 3 different weird flavors for M&M peanuts. We have M&Ms with jalapenos, jalapeno flavor. M&Ms with toffee. Thank you, Vanna. And M&Ms with
my favorite,
coconut. So you can try these different things and vote, and we did it in the office. She's done this with different potato chips and all sorts of other stuff. I'm going to tell you what my favorite is because I frankly thought these 2 were gross.
Really?
Like, seriously gross. Did not like these.
The toffee is the best.
But the jalapeno one, clear winner for me. I like things a little bit spicy.
Well, we need to contact M&M. This is sponsored by M&M's.
No, but feel free to pay me money. But which one did you like, Trey?
The coconut.
Not the toffee. So I think in the office, coconut was the winner. Not for me. I thought it tasted like I was eating perfume, to be totally frank. But you liked it, Darren?
I liked the toffee.
You liked the toffee?
Jalapeno was a creeper. Like it just kind of like snuck up on you, so you would eat it. You're like, all right, yeah, chocolate tastes good, has a little bit of spice, and then
Darren loves the creepers.
3 or 4 seconds later, it's all of a sudden your throat's on fire.
Okay, all right. So I saved it in my mouth. My mouth got a little spicy.
All right, so we've had hogs, cheese melts, whiskey, millennials,
M&Ms,
movie
gaming,
theaters,
movie gaming,
property flippers.
Not a movie theater. It's an app. You
Or
can do it at
movie
home.
apps,
Get
yes,
paid to watch movies. Who wants that? That sounds good to me. Next we come back for. Huh?
Have you tried it?
Have I tried? No, I haven't. I just learned about it now when I was doing this thing.
Okay, we might have to do that as a company thing.
There we go. We can compete to see who watches the most movies, not at lunch.
All right, so it's March Madness. Enjoy your NCAA tournament. Good luck with your brackets.
Subscribe to the show if you want to hear more about Rhoda's M&Ms.
That's right.
Or anything else we talk about. Thank you for coming on, and we look forward to doing a lot more deals together.
Awesome.